Welcome to Overnight Market Brief, pre-market edition by AGI Era. Good morning. Today is Thursday, January 15th, 2026, and it is shortly after 8 a.m. Eastern Time. This is your executive summary of global market developments, analyzing the overnight flows in Asia and Europe, the key macro drivers, and the setup for the North American Open. The prior session and macro context. First, a look back at yesterday's close. Wall Street finished on a defensive footing. The S&P 500 settled at 69.27, down 0.53%, while the Nasdaq 100 fell 1.07% to close at 25,466. Crucially, the session was driven by a strengthening U.S. dollar, but the real story right now is in the macro assets. Right now, the 10-year Treasury yield is trading at 4.149, up 0.43%. The U.S. dollar index is up at 99.05, while crude oil is down around 59.39. Gold is also trading lower at 4617.09, down 0.4%. The slight uptick in the 10-year Treasury yield, coupled with a strengthening U.S. dollar, is creating a nuanced backdrop for risk assets. While the dollar's strength reflects underlying economic resilience, it can act as a headwind for multinational corporate earnings and commodity prices. The significant decline in crude oil, down over 4%, suggests either concerns about global demand or an increase in supply, further complicating the macro picture. Overnight session, Asia and Europe. Moving to the overnight session, global markets have been largely unified lower in Asia, with Europe presenting a more mixed economic narrative. In Asia, the picture was broadly negative. In Tokyo, the Nikkei 225 finished down 0.42%, tracking broader regional sentiment and continued yen weakness, which has been influenced by ongoing election talks and concerns over potential spending. Meanwhile, in Greater China, the Hang Seng fell 0.28%, while the Shanghai Composite declined 0.33%. The synchronized weakness across major Asian indices suggests a cautious stance, potentially influenced by a lack of fresh stimulus details or general risk aversion. In Europe, major indices are trading with a cautious optimism, primarily driven by positive economic data. The German economy grew 0.2% in Q4, officially ending a two-year recession, a significant development for the Eurozone's largest economy. Additionally, the UK economy returned to growth in November, and Spain's inflation rate dropped to 3.0% in December. This price action suggests a degree of resilience in the European economy, providing a somewhat constructive lead-in for U.S. traders, despite the broader Asian weakness. U.S. futures and the open. Turning to the U.S. pre-market, equity futures are showing a positive bias. S&P 500 futures are trading up 0.36%, while Nasdaq 100 futures are up 0.8%. The relative outperformance of Nasdaq 100 futures suggests investors are rotating into growth-oriented sectors, particularly technology, despite the slight increase in the 10-year Treasury yield. This move indicates a potential shift in positioning, with tech stocks poised to regain momentum, possibly in anticipation of upcoming earnings reports or a reevaluation of growth prospects. The Daily Catalyst. Looking ahead to the session, investors are focused on three key catalysts. First, the continued strengthening of the U.S. dollar index, reflecting underlying economic strength, will be closely watched for its impact on global trade and corporate earnings. Second, the positive economic data out of Europe, notably Germany's Q4 GDP growth ending a two-year recession, will influence global growth expectations and risk appetite. And finally, the observed rotation into growth-oriented sectors in U.S. equity futures, despite slightly higher yields, suggests a focus on individual company fundamentals and positioning ahead of the broader earnings season. Given the overnight setup in rates in the dollar, the market's path of least resistance appears to be range-bound, with a slight upward bias for equities, pending any surprises from the data releases or shifts in sentiment. That concludes your overnight market brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.